All right, welcome to Talk the Talk with Tribe Title. Today's guest is Dawn Elliott. Thanks for coming on the show today, Dawn.
Thank you for inviting me. I appreciate it.
So you're a mortgage banker.
Yes.
And where do you work currently?
I work for First Merchants Bank.
Okay.
I work, headquarters is Farmington Hills. I work Livingston County. I live in this county, been here my whole life, and have my home office here. So this is where I spend most of my time.
Awesome.
Yeah.
And have you always been in mortgages?
I started in mortgages in 1989.
Wow,
it was
okay.
the first countrywide office in Michigan, in Lathrop Village,
Yeah.
and worked there for about 6 months. And then we opened another office in Livonia, and that is where I started my career.
Okay.
My dad was a builder in Livingston County,
Oh, nice.
and his secretary her name was Carol, and she had a sister who had actually started an office for Countrywide, and that's how I started my career in mortgages.
Very cool.
Yeah.
That's probably a good tie-in too, right? With having your dad as a builder and then you being in mortgages.
It was kind of in my blood.
Yeah.
I would have never thought I'd go into finances, and I had a choice at the beginning, real estate or mortgages.
Yeah.
And I chose the mortgage route. It felt more natural to me, and I like the idea of, in terms of sales, that there would be more of the repeat customer with refinances,
Right.
as opposed to real estate where, someone might buy 2-3 homes their entire life.
Right. Yeah. And I mean, it seems like there's a ton of realtors. So it's like really hard for them once they do that deal to get that referral piece, because it's like you have to stay in front of them nonstop because there's so much competition. Whereas mortgages, obviously there's still a ton of, mortgage loan originators, but the key thing is you can really kind of give them your education piece. And once they get that and feel like they can trust you, then that's something they're probably going to stick around for.
That's a part of my sales philosophy, is that the best salespeople are teachers. Because if I can teach somebody the process and what is happening or going to happen, they trust me.
Right.
And that's what brings a lot of repeat business as well.
Yeah, for sure. And that's the kind of takeaway I've taken. The few people that do mortgages that I've spoken with are doing it on a very high level, like yourself. And that's the biggest thing that they've all said that's different than everybody else, is that they don't look at it as sales. They look at it as education.
Yes.
They're like, we educate, and then we give them the tools to then make the right decision on their own. We just lay all this stuff out for them, and then we try to structure something that works for their game plan.
Yeah. What's the best plan for them, for their family, for the now, for the future, and putting them in the right program and having the tools or the right programs for customers.
Right.
It differs from bank to bank, broker to broker, as to what loan types are available.
Right.
There's always the standard conventional FHA, VA. There's USDA, and all of Livingston County is USDA, which is a zero down loan. And then where I work at First Merchants, we have what we call portfolio loans. That means they're our loans. We keep them on our books, and we basically develop these products to be tailored to clients.
Okay.
So, for instance, one of the programs I have is called Hometown Hero. It's for first responders, it's for nurses, it's for teachers, police officers, and 501c3. So
Nice.
pastors, maybe people that work for United Way or OLSHA.
Right.
And what it is, it's a 3% down with no PMI.
Oh, wow.
So it's an incredible program that will enable what we call a reward, essentially, for those that are out there on the front lines, and enabling them to get into home ownership.
Right.
So that's just one of the pieces and one of the products that we have, which I appreciate with Community Bank. There's a place for big banks, there's a place for brokers, there's a place for all of us inside of the industry. And I don't see my quote unquote competitors necessarily as competitors, but we're all on the same team.
Right.
And ultimately the goal is to get people into home ownership and
absolutely.
achieve the American dream.
The cool thing too about what you said is that Hometown Heroes program, it's like those are the jobs that, A, they're hard jobs, B, they're super important, and C, it seems like even though they are super important and super necessary, they're also sometimes the lowest paid.
Yes. And thankless.
Yeah.
And it's our way of saying thank you.
Right.
Unfortunately, I have a child who's a police officer,
Yeah.
and there is a lot of thanklessness, there is a lot of very thankful people.
Right.
Don't get me wrong, but yes, being able to be out there and to help. And what I find too is that once you're into a particular school or maybe a police department and they know about you, then they're telling their friends and their coworkers, and that also helps to spark people to think that they could never own a home, or they had to save all this money in order to be able to do that, and they can get into home ownership quicker than what they thought.
Yeah, no, I never even thought of that piece, because that is cool. Because once, it's like when people buy a house, they tell everybody, they're like so excited about it, of course. But that makes sense. Then you get in a position like that where you work at a police department and you buy a home, and now you have all these other young police officers that are probably thinking they're never in the position to buy. And now they hear that and they get that spark of interest, which is a great referral piece.
And it's not a first-time home buyer program. So if you're already in a mortgage and you have private mortgage insurance, you can refinance.
Oh, really?
Into this program.
Yeah.
Of course, you're going to look at interest rate, which is a whole nother thing. To see if it makes sense. But you don't have to be a first-time home buyer in order to use this program.
Oh, that's really cool.
Yeah.
So even if you had a house, let's say you were a first responder, you owned a home, you sold it, you made some money. The cool thing of that is that then they could take some of that money and keep it aside and invest it or do something else with it, and they can still get the 3% down without incurring any of that PMI or any of that stuff.
Correct. And I've literally had customers like that. And I currently have a customer, they have a home right now.
Yeah.
They want to keep it as a rental. So they're buying their next home. They don't have to take all the equity out of that home.
Right.
They only need the 3% down, and they can purchase their next home.
Right. And then they can cash flow on the rental.
Exactly.
Yeah, no, that's great. And do you do a lot of that type of stuff too? Do you educate people as far as like what their options are? I know a lot of people, it seems like I always see these people with the first time home buyers that then sell this house that they bought really cheap. And then it's gone up a lot in value, and they always sell it and go and buy something else. And I'm thinking like, man, if you wanted to build long-term wealth, you should have kept that. Your mortgage payment was nothing. You have the equity in it. You could cash flow that as a rental. Is that something that you kind of try to educate people on?
I definitely would try to educate somebody in that, especially now, obviously I'm not a financial planner or advisor, but if in our current economy too, if our 401ks or our other investments are tanking, unfortunately, to invest in real estate, not to say that that's always a guarantee, because we all lived through 08, 09, right? But yes, there is a housing shortage. There is going to continue to be a housing shortage, unfortunately. Yeah. So being able to hang on to real estate, as you said, to your point, building that wealth, if you can get to the place where you have that income flow and say you want to retire, those returns you're not going to get out of the stock market or out of your 401k the same way you can with a rental return.
Right.
So yeah, just letting people know what their options are. You're not telling them what to do, but at least educating them so that they know that they don't necessarily just have one road to walk. There's more.
Right. Yeah. The beautiful thing about it too is that I didn't realize, I guess until recently, that, if you have a bunch of rental properties and you have equity in those properties, you can then take that equity out, through a cash out refi, and you're not paying taxes on that.
Right.
As you would with regular income.
Right. Because it's not a capital gain.
Right.
That's correct.
Yeah. Which is incredible. I don't know how I never knew that, but I figured that I'm like, wow, okay, now I see how people are making a ton of money in real estate.
Right. Yeah. So having your team, if you will, having your mortgage professional, having your financial planner, having people that can kind of help you to get the full scope of your finances or your resident wealth is key.
Yeah, I agree. And that's cool that you said that, because that's what the other thing I've heard, some mortgage bankers are just transactional. Oh, this is what you want? Okay, that's what I'll give you. And it's not like, hey, what's your situation? What are your goals in life? And they look at it as more of, that is your residential portfolio. Mm-hmm. And what do you want to do with it to maximize your potential with it? And
there's this catchphrase out there about being transrelational. for me personally, that's just who I am.
Yeah.
I can't help it. Doesn't matter if I'm sitting here with you talking
Right.
or if I'm talking to a customer with regard to a mortgage. I'm going to always be relational because it's just natural to who I am.
Yeah.
It's a part of the piece of what's built my business and what I do. My classification is CRA, mortgage broker, which is Community Reinvestment Act.
Okay.
So other piece of my job is being out in the community in Livingston County and helping the low to moderate income borrower get into housing. I also work with Habitat Detroit, and that's very satisfying in helping people achieve home ownership and getting into those Habitat homes. That's been really rewarding. I also work with Love Inc. out here in the community. I work with Olshaw, and they help educate people and get people into housing. And it's just a part of naturally who I am and helping people to achieve that. So I can do a loan, $3 million or, $50,000. To me, it's the same.
Yeah.
People are people, and my job is to help them to achieve that ownership.
No, that's great. And I've always said that too with realtors in regards to everybody wants the $1 million listing, but it's like, okay, that is great. But that first time home buyer, like you said, the $50,000 mortgage, as opposed to the $1 million mortgage, you're getting them at step one in that real estate journey. You know what I mean? They're probably going to have 12 steps throughout their real estate journey. And if you're getting them at step one, the odds of you keeping them through the other 11 steps is probably much higher.
I literally have. I've had people that have started out with their first home, and I've been in this industry a very long time, and I've watched them grow their family, grow their business, and do their mortgages and into that next home or that refinance, and then helping that child into college. Yeah. So it's been very satisfying.
Oh, I can imagine. That's got to be really cool to watch somebody grow like that in front of you.
One of the other things that we are doing at First Merchants is what we call Next Horizons. So in Livingston County, first-time homebuyer, we have a program with a very minimal credit score of 600 that will allow you up to $3,500 towards your closing costs. And again, 3% down, no PMI.
Yeah.
So for that entry-level homeowner, that is a beautiful program. And I personally believe that going into 2023 and onward, that first-time homebuyer is going to be key for real estate for myself and staying above water during these the turmoil times that we're in. The other product that we have is also Next Horizon, and it is going to be Oakland County, Washtenaw County. We do down payment assistance. You can have up to $7,500 towards your closing costs.
Okay.
It's 100% financing. And again, that minimum threshold of about a 600 score. Obviously, there's other conditions and terms that go with that. But that also we have, and no PMI.
No PMI.
No PMI on any of these programs. And what that does is that's going to allow you to stretch your budget so that you can get into more home.
Right.
And we know how competitive it is right now.
And with no down payment, with that assistance and no PMI, I mean, you 9 times out of 10, they have to be paying less for a mortgage payment than they were for rent.
They are. With that Next Horizon would be our MSHDA loan here in Michigan, which can give you up to $10,000,
okay.
$7,500 to $10,000, but that's going to have private mortgage insurance.
Okay.
So that is going to afford you a little bit less, but it's my job to see which program you fit into and help you to get to that place. And my philosophy with first-time home buyers is never, no, I can't. It's always, I just can't right now.
Right.
Let's get you on a plan. Let's fix your credit. Let's get more time on the job. Let's look at these things so that in 3 months, 6 months, or a year, we can help you get into a home.
Yeah, which is awesome. And that's what's scary is so many people call like big banks, like, hey, this is my situation. This is what I want to do. And they tell them no.
Right.
And that's it. They stop looking because they feel discouraged and they feel like they don't have any options. Where had they reached out to the right person the first time, that person would have probably A, been able to find them something, or B, been very upfront with them, like, hey, this is what you need to do in order to get to where you can qualify. So the education piece is huge and missing from a lot of banks.
Yeah, and that's where a lot of people will walk into their bank and they'll ask, but having a trusted real estate agent who has mortgage partners, maybe not just one, they might have 2 or 3 or 4 that have these variety of programs so that they can help guide that customer to the right place. And then also, rely on your parents, your family, your friends, and ask questions.
Yes, for sure. Except when it comes to home inspections, then don't ask your dad. Seems like that kills like so many deals. Is like the dad over the shoulder of the home inspector, and then they walk away.
A professional home inspector is very important. Yes.
Oh, that's funny. So there's a lot of programs that people can take advantage of. And then I know you were saying all of Livingston County basically qualifies for USDA mortgages?
Yeah, so USDA is, it's not food.
Right.
It's the USDA, and they have a zero down program. It also is not first-time home buyer.
Okay.
The limits on that are going to be income limits, but you can have more than one family member in the household, so that will raise that income limit. And then USDA, especially out here, and especially now that we are switching back over a little bit more towards a buyer's market as opposed to a seller's market, you're much more likely to get your offer accepted now.
Right.
And you can keep your money in the bank essentially and do the zero down. And USDA, they have an insurance premium. It's not PMI, but there is a premium on there, but it's much less than what private mortgage insurance would be.
Okay. Yeah, that's a good deal. And especially like you said, and then you can keep some of that capital somewhere else if you wanted to. Now, why is it that Livingston County qualifies for that?
We're considered rural. The entire county is considered rural. If you go over into Washtenaw, Oakland, there are pockets of USDA, all over the country actually. And there's an eligibility map that we look at, and we put the exact address in to make sure that property is qualified for USDA.
Yeah. That's wild. I've never heard of an entire county being qualified.
Yeah, Livingston County is.
That's kind of a not a loophole, but it's kind of something that a lot of people could probably take advantage of.
And again, it's one of those products that not every bank has.
Right. Yeah, you hear very little about it.
It's available, but you have to have the programs built into your systems to be able to process and underwrite and close and warehouse those loans.
Right. Which is the other great thing about finding somebody that's been doing it a long time is like it takes a long time to learn all these different programs and to know them. And you know what I mean? It's almost like a doctor. Do you want a year one doctor right out of school, or do you want a guy that's been doing it for 12 years and has seen and done the continuing education and found all these different things? Same thing with mortgages. I mean, I want somebody that's got the experience to know all the available programs for me. There
are so many pieces to being a mortgage loan officer. You have to know the programs, the guidelines. You have to be licensed. You have to be able to sell. You have to be able to relate to people. You have to know realtors and builders and financial planners. And there's all these moving pieces all the time because guidelines change. Guidelines changed during COVID. There were more restrictions. So there's things that you have to be able to always be able to change and go with the flow. The industry I started in 1989, when it took 4 days to get a credit report and I'm hand typing mortgages with, the egresses and all the information on property descriptions to today, it's not the same industry.
Right. It's wild how fast you can get the information now. Which is cool.
If it takes more than 30 seconds to get a credit report, now I'm upset.
Yeah. Yeah. You're just hitting all the keys. What's going on? Yeah. It's wild how it's changed. That's like everything. It's got its good and its bad. I mean, the good thing is that you're seeing deals close very quickly, which is a great thing.
Yeah.
Sometimes it's tough on us being in the title industry because all of our timelines have moved up as well.
Yes.
So that means we got to be on top of it to get things cleared and to get sometimes when something pulls up on title and you're like, okay, this is going to take a few weeks to get cleared. So that's the downfall. But the overall process has been improved a ton.
The typical purchase contract now is being written for 30 days, and we're going to close it in 30 days or less.
Right.
Because the industry, the refi business has fallen away. It will come back.
Yeah.
It's cyclical. Interest rates will come back to I doubt that we'll see the 2s and the 3s again. Those were
Right.
artificially deflated rates, if you will.
Yeah.
But, prior to COVID, we were right around the 5% range.
Right.
We were edging right there at 5.25, depending on, the combination of your loan with your credit score and down payment and such. So hopefully we neutralize back to that range. But when I started in this industry, they were 10.5%.
Yeah.
My parents, they had land contract because they were 18%.
Yeah.
I bought my first home, I was 7.5% interest rate. So it really is perspective. And again,
Yes.
it comes back to that educational piece. When I'm talking to somebody, and the philosophy for me and others out there is that you are going to date the interest rate,
Yep.
but you're going to marry the house.
Right.
So don't focus on that. I'm going to help you. The other thing I'm selling a lot of are adjustable rate mortgages. If a year ago, people would have said, "Are you crazy? There's no
Right.
way I'm doing that." Well, the adjustable rate mortgage of today is not the same one that was years ago.
Right.
My adjustable rates today are amortized on a 30-year loan, but they're going to have a term of 7 years or 10 years of that interest rate being locked in.
Yeah.
That gives you a scope of time to see what rates are going to do.
Right.
But in addition to that, the average homeowner is only in their house 7 years now.
Exactly.
So the likelihood that you're going to be there in 7 years is pretty small.
Right. Or refi it, which most people do that every couple of years.
Right. Which leads me kind of like to the 2-1 buy down.
Yeah.
That's a big buzzword out there right now, is that product type. So it's complicated, and just for framework, let's just say that it starts at 5%,
Right.
and the seller of your home paid for that interest rate, and next year it's going to go to 6%, and then the next year 7%. Well, for those same dollars, why not invest or ask that seller to pay for your closing costs now?
Yeah.
Do a little bit higher rate now that is going to be the same next year and the next year.
Right.
And then you've already paid for closing costs that your seller has the first time. Next time you pay the closing costs when you refinance. So there, again, it's tools, it's education, what works best for you and for your situation.
Right. Yeah, and like you said, it needs somebody that can talk that through with people in order for them to actually be able to see the light bulb go up and go, that works for me. That's the
Talked
program
to a customer
I need.
last night, and we looked at the 30-year versus the 7-year ARM.
Yeah.
And there was a 1.25 point difference. It was a $150 a month difference.
Yeah.
And there's a little bit of risk. And I tell people, if you go to Vegas and you hate Vegas, you might not want an ARM product, because if you wake up every morning and say, in 7 years, my rate's going to
Right.
adjust, you might not want that. But for this customer in particular, for those savings, in 2 years, if they refinance, they've already paid for their closing costs.
Oh, yeah.
So there's a lot of ways to look at it and to make that decision as
Right.
to what's going to be best for you.
Yeah, and like you said, if it, depending on the situation, if it's a young buyer, young family, the odds of them being in that house in 7 years are slim to none anyway.
Yes.
So,
And their income's going to continue to go up.
right.
Hopefully, over the next few years.
Yeah.
So if they are still in that product and it does adjust. Now, if we go back to 2008 and 2009, people that were in adjustable rates, they did great,
Right.
because the market went down so much. They were in a very low interest rate.
Yeah. Yeah. So it does work both ways.
It does.
The other cool thing too is when you look at like the longevity of a homeowner and like those examples you used, it's crazy to me when people don't buy. Well, anytime. If you're a rent, I mean, sometimes I get it at the time's not right, but if you're a renter, there's never a bad time to buy, because as a renter, you're not getting anything. You're paying 100% interest. So it's like, why not buy something, even if it's, like you said, you're not in love with the rate, but if you looked at it compared to 6 months ago, that really low rate, but you're paying over asking on the house, your payment's probably right about the same as it would be that now you're getting money off the asking price plus some seller concessions, and you're paying a higher rate. Your payment's probably within $25, $30, I would imagine, of what it would have been 7 months ago.
And rent is going up exponentially.
Yeah.
There is a neighbor of mine. There's a fourplex next door to my house, and their rent literally went up $300 going into their next lease. So there is this element of having no control. And what if the owner of that home or that apartment building or wherever you may want you're at, they decide to sell?
Yeah.
Now you got to find a place to live.
Right.
And of course, when you go into a house, your payment is going to go up the following year because of taxes,
Right.
which is a whole nother thing. And again, that's education and explaining to people that there is going to be an increase. But it's now you have some control and knowing where your budget is and where it's going to be, as opposed to rent right now, which is in some ways uncontrollable.
Yeah, for sure. Or best case scenario, you can stay in that unit. The person that's selling it is selling it because the market's high, which means the investor that then buys it is buying it high, which means that in order for that property to cash flow, they're going to have to raise rents.
Right.
So it's like, even if they let you stay, your rent's probably going to go up.
It has to, because the house comes uncapped, or that investment comes uncapped.
Right.
So now you have a whole new real estate tax that's associated with that.
Yeah.
And so, yes, it does.
That's another good point too, is the uncapped value. The situation 7 months ago where people were paying well over asking for these homes, that's got to be another component when you look at your payment, is in that next year when your payment adjusts, if they're paying $450 for that house, and now this year you can get that same house for, let's say, $390, even your property taxes are going to be less. I mean, over that next year when that adjusts, that's got to make up the gap between those two payments.
And the other thing, and what I try to do right in January, is let my customers know that did close this last year. Be aware that you've got a tax assessment going out. And let's say you did overpay for that house, but it appraised for less, which, in the moment, you don't want that to happen.
Right.
But if it does happen, when they go to do those adjustments on the value of your property, that appraisal now becomes a tool for you to be able to take to your local township or city and say, hey, this is the actual value of the house based on what it appraised for, and maybe keep those tax bases down a little bit.
Yeah. Now, a question, you may or may not know this, is just kind of off subject, but when you said that, I was thinking about that. Can you do, let's say you buy a house, 2 years goes by, for some reason, something crazy happens in the market. The house is now worth considerably less than you paid for it. Can you actually have your own appraisal and then take that appraisal to a township in an argument to get your property taxes lowered?
So there's always opportunity. So every year when you get your tax assessment, there's a very small window. They don't give you a lot of time to contact them and go before the board or the committee. I personally experienced this when I purchased my home. They way overassessed me. Yeah. So I had the knowledge inside of this industry to know what to do. Right. So you go before the board and you present your appraisal. Maybe you do some research as to what your area has done or what values have done, and make the case, make the argument. I think it's always worth it. And paying attention to what's on there, and looking at your township or city site and see, like, I lived in a house in Heartland at one time, and they said that there was granite and there wasn't.
Oh, really?
So I went to the township and presented when that window was there, and won and lowered my taxes.
Nice.
Yeah.
Yeah, that is kind of weird. I've always wondered where they pull that information from, because I've had a couple houses of mine that it's been either wrong finish types, wrong bedroom amounts, things like that. Sometimes it's good, if you're like, sometimes you take it personal, but you're like, it says it has linoleum, and you're like, I don't have linoleum in my house. I have hardwood floors. But then you're like, wait a minute, I'm just going to leave it as that because it's a lower taxable value. But that's when your pride kicks in. You're like, I want everybody to know this is hardwood. But
a lot of times it's when you go to file that homestead exemption. Yeah. They have those questions. Does your house have this? Does your house have that? Yeah. So the house that I was in was new construction. So I think they had made some assumptions from the previous owner as to what may or may not have been in that house.
Right. Or the next door one, maybe they paid for all the upgrades and they're
right.
Okay, that makes sense. So you got to pay attention to that. The other thing too that we've run into a lot of times is when people turn in that principal residence exemption form and they don't get the time-stamped receipt, and then their taxes go up. We've had closings where they had been paying non-homesteaded taxes for 3 years because they just didn't pay attention to it. The paperwork had never been filed. Or, it was lost, whatever the case is, and they didn't pay attention to it. And then at the closing is when the guy realized he had been paying non-homesteaded taxes for the entire 3 years he owned the property.
That's pretty sad.
Yes.
I'm in a situation right now with a client who built a home, new construction,
Yeah.
and they received a tax bill and called me and said, what happened? Because it went up a huge amount of money.
Yeah.
And my first question was, did you file your exemption and for your homestead? And they're like, what? I'm like, you need to. So they went and checked it out. And sure enough, they had not filed that homestead exemption. And the township that they lived in worked with them. They literally rescinded it and gave them back the difference, which is, usually that does not happen.
Right.
But it was a short time. It wasn't like it was years, like your example. Yeah. But now I'm helping them working through the escrows because the escrow's wrong.
Oh, yeah.
So, yeah.
Yeah, it's never fun to be in.
No.
But I mean, it's not that same thing. Like, educate yourself, reach out to somebody instead of just assuming. Like, I'm assuming this guy probably thought they went up because he bought it. And instead of asking, he just dealt with it for 3 years.
Well, what makes me feel good about what I do is that they call me.
Yes.
Here's what happened. It's not a mortgage thing,
right?
But because I give them a lot of information, they see me as a resource. Yeah. So they call me and say, hey, can you help? And of course, I'm going to see what I can do to help.
Yeah, they know, like, and trust you.
Yeah.
Which is great.
And one of the things that I do in my job title as Community Reinvestment Loan Officer, I do financial education. I teach MSHDA classes. I help with Habitat and teach some of their classes and first-time home buyer classes. So it's just ingrained in who I am. Yeah. So even if I'm not sitting here talking to Brett or I'm in a restaurant talking to somebody and I hear them talking about mortgages or finances, I find a way to insert myself into that conversation and help people.
Yeah, sometimes you have to because you'll hear people saying things and they're wrong and you're like, wow, this is misinformation.
Or there's an alternative.
Yes. Right. Yeah. And it's like not to be nosy, but at the same time, you're like, I could completely change this person's outcome by just letting them know that information is not true or not accurate.
I don't want to be a busybody or gossip, but I want to help you.
Yes.
Here's what you can do, or here's this resource that you should go check out and see if you can get some help.
No, that's really cool. So now those kind of different things that you're on, how long have you been part of those organizations as far as the education and the Habitat?
Probably 4 years, 5 years.
Okay.
Habitat's new to me. I've only been with Habitat for about a year. I've done community reinvestment for quite some time.
Okay.
And I had never done Habitat loans. Habitat was brought to me about a year ago and they said, will you do this? And will you go to Detroit and do this?
Yeah.
And I'm like, okay, I'm a team player and I will. At first I was like, oh, I don't know if I can do this.
Yeah.
And then we've had some really great successes.
I'll bet.
And so it's been very satisfying. Actually, next Saturday, I'm going to a dedication of a customer that we worked with and we helped her and got her finances in place and she's moving into a home.
That's awesome.
Yeah, by Christmas.
Very cool.
Yeah.
So now those homes, so those are Habitat for Humanity homes, correct?
Correct.
And then, so there's actually financing on those? Is that how it works?
So there is lots of down payment assistance.
Yep.
So with what we do, we will use our Next Horizon program. So we will give them our down payment assistance and we will gear the underwriting, if you will, based on those guidelines.
Yeah.
And then Habitat also partners with MSHDA and National Faith and other organizations that also will contribute down payment assistance.
Okay.
So my client in particular got $7,500 from us toward closing costs, and then whatever's left over from that will pay down their principal balance, and then the other $14,999 they got from National Faith will also pay down that principal balance. So there are organizations and there are tools out there to help people to get into homes, not just Habitat,
right.
But MSHDA targets a lot of areas in Michigan with certain zip codes for up to $10,000 with down payment assistance.
Yeah. Now, have you heard anything about these improvement zones? Do you know anything about those? So that's something I've just been learning about recently, and I don't think there's any around here, which is the problem. But improvement zones are basically somewhere where the government is incentivizing investors to go in and try to spruce up the area. And
that's about what Michigan's doing with those certain zip codes.
Yeah.
So if there's areas, neighborhoods, zip codes that they want to incentivize to have home ownership, because we know when somebody owns a home opposed to renting a home, they're going to take pride in that.
Yes.
So that helps bring the whole neighborhood values up.
Right.
And ultimately, that's what they're looking to do.
Okay, so that's kind of a targeted area where they're trying to get more home ownership, more pride in the area.
Yeah, that could be anywhere from Pontiac to Sheboygan, Michigan.
Yeah.
So all those places in between where you have pockets of Michigan that maybe had industry in it, and now the industry's gone.
Right.
So those areas have become depressed or low to moderate income areas now, that the state and the government is still interested in making sure that home ownership and those neighborhoods stay vital.
Right, which makes sense, because otherwise you just get the situation where you have investors go in there, they buy everything up, they charge rent, which is still, based off of rental values, which is typically high for what they paid for the house.
It is.
And then that's where you get these people in this cycle where they can never get out of it.
Right.
Which is really sad. So that's really cool that you guys are doing something like that to help them out.
Yeah, we are.
The Habitat for Humanity, is that, that's where the group actually goes in, right? You volunteers go in and build a home and things like that?
Right. And the purchaser of the home has so many hours that they have to put in. That's a requirement.
Oh, okay.
It doesn't have to be on their home in particular, but they do have to give back, essentially,
right,
in order to obtain that Habitat home. They also have to have money invested. So Habitat works with them, and they have to have a savings account.
Yeah.
And they begin that savings account with Habitat so that they have some skin in the game.
Right.
Which will obviously help you with pride of ownership. And when you have skin in the game, you're more likely to take care of whatever it is that you own.
And the really cool thing about it is, if you think about it, it makes perfect sense. You're having them, they have to submit a certain amount of hours worked, which is great, because up until that point, a lot of those people, I mean, this is probably an assumption, but a lot of those people probably had no idea how to do any of those things, which are things that are going to come in handy as a homeowner so that you can maintain your home. So you have a little bit of knowledge as far as what goes into the house, how do I maintain it, what do I do to it? And then the savings piece is same thing. They probably never had anybody in their life teach them about saving or doing anything, or credit, or all these things that are now. So you're kind of giving them the full pieces to actually be able to succeed at this as well.
And that's exactly it. One of my hopes and my passions is to get into high schools, teaching those life skills of, how to budget. What does it take to maintain a home? How much of my budget should I use? What is credit? What is student loan debt? What are all those things that are going to impact me when I am 19 years old or 20 years old? What am I going to do with these things? There's a harsh reality, and there's this gap within this generation that is coming out of high school or that are in their early to mid 20s, that they didn't necessarily get those pieces.
Yeah.
They went to college, they expected to get these great paying jobs, and it didn't work out that way, or they took another avenue, they didn't go into that.
Right.
And they have, $58,000 in student loan debt, and how is that going to impact me in my future? And even if I'm talking with a client and let's say they can't afford a home right now, I can at least give them some information on, here's what you need to do. Here's how you can improve your credit. Here's a way to maybe pay down some of these things. Here's how to pay down credit card debt so your credit scores go up, that sort of thing, and educating them and helping them in reality. Right. Even if you don't own a home, debt is a necessary evil of our day. You have to have a credit card.
Right.
So I occasionally have clients that go through certain financial education, and I am not a proponent for debt. I'm not saying go into debt.
Right.
But if you have not used credit cards or used any sort of installment loan in 12 months, when you go to buy a house, now you don't qualify because you don't have a credit score, or you're in a program that's going to have a much higher interest rate and private mortgage insurance attached to it. Right. Now, we will do some alternative credits, but having and using credit wisely.
Yes.
Like I have a Costco card. I pay my stuff on that, and I get a nice check for, my Costco Christmas shopping every year.
No, my wife does it too.
Yeah. So utilizing that and knowing how to use credit is also important.
No, I think that's huge. That would be really cool if you could do something like that, because that's my thing too. I feel like in school, one of the biggest things they're missing, there's no mindset.
Right.
And there's no finance.
Right.
And I'm like, these are two of the biggest puzzle pieces that are going to help you be successful in life. And nobody's teaching any of it.
It's huge. If I could get into schools, even if you give me 2 days with a life skills class and teaching these young people coming out, because now they are armed. They can come out and be successful, because it's not like our parents that got out of high school and could go get a job at the factory and make good money and support their family. And, I remember diners cards and American Express that you had to pay it off, and you had layaway. And so people didn't have, like my parents' generation, they didn't have debt. Because it wasn't available. Yeah. It's a totally different world today. So there does need to be some changes inside of the educational system for life skills.
Yeah. Or even the fact that previous generation, like my parents, like debt's bad. All debt's bad. And I'm like, there is good debt, you know, there is good debt if it's something that's going to appreciate in value.
Like real estate.
Exactly. Right. And then there's bad debt, of course, obviously too, which is credit cards. But like you said, you still have to use it. You just have to be responsible with it and pay it off, obviously, before you're getting crushed on compounding interest.
Correct.
But you have to have that track record in order to be able to build your credit.
Right.
So yeah, a lot of pieces that kids are not getting, unfortunately.
Yeah, when I got out of high school, who cared what a credit score was, right?
Right.
Today, coming out of high school, that is going to make a difference in your future and in your life.
Right. And if it's something you learn on your own, it takes forever. That's how I learned it. I went into the military. All of a sudden, I had all this credit available, because everybody knows Uncle Sam's not going to let you fall behind on your payments, so they give you credit. Of course, I ran up credit, had all this debt, bad debt, and then it took me 10, 12 years to rebuild my credit score, to where now I understand it and I appreciate it and I value my credit score. But it's like, man, had somebody taught me that at an early level, or even one step further, like if you're in the military, they should teach you that as one of your first things in the military. Like, hey, look, you're going to have all this available credit thrown at you.
Right.
These are the things you need to do in order to make sure that you're able to maintain a life outside of this.
And even for veterans, that's a whole nother vein to go down. Veterans don't know what's available to them. They can buy homes zero down. Yeah. There is no private mortgage insurance. There's a funding fee that can be financed, but that funding fee goes back to the VA to continue to help other veterans in home ownership. Right. And if you're a disabled veteran, there is no funding fee, and you can even go to your local township or county and have your taxes exempt if you're a disabled veteran, or if you're struggling to make your payment. So veterans are a whole nother piece out there that aren't necessarily educated in the programs that are available to them, again, in home ownership.
Yeah, and it's a great program. I did one on my house in Arizona, and they go a step above, too. I mean, with their VA inspections, they come out and they hammer them on everything. I mean, I had windows replaced for like a little bit of fog in the corner. The guy had to replace a roof, which it wasn't, in dire need, but that was part of the deal in order for it to fund. And luckily the market was different then too, but a great program.
Yeah, protect our veterans and let them have back what they've earned.
Yeah, and typically a lower interest rate, right?
Yeah, typically a lower interest rate, not credit score driven. So some products with mortgages, if you have a lower credit score, you're going to have a higher interest rate, which is not true. Like on our ARM products, if you have a 680 score or if you have a 780 score, same interest rate.
Really?
So there's some advantages there too, again. Yeah. So again, finding that mortgage loan officer that has the experience and has the tools. And I think that for me going into 2023, that is really my my mantra going into the year. What tools do I have that can help real estate agents, help financial planners, attorneys, working with divorce attorneys, because unfortunately divorces happen and people have to find housing or they have to refinance somebody off the house. Having the tools and the equipment to be successful and moving forward into 2023.
Absolutely. Well, it sounds like, I mean, you're the person. It sounds like you definitely have the knowledge, the experience. You're a great value add to anybody that would contact you. How does somebody go about reaching out to you if they wanted to ask anything mortgage related?
They can call me. They can call my cell phone. I've had the same phone number for almost 30 years.
All right.
So I have clients from, 20 years ago that still have my phone number. And that would be 810-577-0727. Or they can go to my website, go to First Merchants Bank, and just type in Dawn Elliott, and you will find me. And I would be happy to help. And if truth is always... And truth, if I can't help you, I am going to find a way, an avenue, even if it's another bank or another lender, to help you to achieve your goal and to get into a home.
Yeah, I love that. There's you and only one other person I've spoken to that does mortgages that says the exact same thing, which to me tells a lot about that person. When you say, if I can't help you, I'm going to direct you to somebody else that can. So it's not about the money to you. It's about making sure that their end goal is met.
It's calling.
Yeah.
It truly is. Like my son, and probably like yourself, going into the military. Some people go into it just to do it, but it was a calling.
Yeah.
So that's how I feel about it, and I'm very passionate about it.
That's awesome. Well, it shows. Thank you for coming on. It was great talking to you. It was a lot of information that I'm sure would be helpful to a lot of people that are struggling to figure out how they're going to get into home ownership. Like you said, that's the number they can reach you at, and we'll also put links in the bottom of the podcast for anybody that wants to reach out online. So thanks again for coming in. We really appreciate it.
Thank you, Brett. I appreciate it.
You're welcome.
Happy holidays.
Happy holidays.